Politics and money usually play by quiet, careful rules. Behind closed doors, decisions are made with measured words and cautious gestures, rarely spilling into the public eye. The world of central banking and government finance is built on trust, stability, and a sense of decorum. Until June 12, 2025, when Donald Trump shattered the silence and upended the status quo with a single, unforgettable moment. At a White House event, Trump pointed at Federal Reserve Chairman Jerome Powell and, in front of cameras and a stunned audience, called him a numbskull. The word echoed through the halls of power and across the airwaves. The insult ricocheted from newsrooms to trading floors, igniting a public feud over America's economic future. Suddenly, what had been a technical debate became headline news, with everyone from Wall Street to Main Street taking notice. Trump claimed Powell's refusal to cut interest rates was costing the country $600 billion a year. He painted a picture of missed opportunities and unnecessary hardship, blaming Powell for holding back the nation's prosperity. He argued that one man's stubbornness was making life harder for everyone, families struggling with higher bills, businesses facing tighter credit, and workers worried about their jobs. This wasn't just a personal attack, it was a calculated move in a high-stakes economic battle. Trump was putting pressure on the Fed, turning a policy disagreement into a national spectacle. Trump's allies, including Vice President J.D. Vance, quickly echoed his demands for lower rates. The administration closed ranks, amplifying the message and making it clear this was now a coordinated campaign. The message: the White House wanted action, and they wanted it now. The pressure on Powell and the Fed was unmistakable, and the stakes were rising by the hour. On one side, a president pushing for immediate relief; on the other, a central banker tasked with keeping the economy stable, even if it means tough choices. The clash was as much about power as it was about policy. The numbskull comment wasn't just an insult, it was the opening shot in a fight that could hit every American's wallet. The outcome would affect mortgages, savings, and the cost of living for millions. Suddenly, the quiet world of central banking was front-page news. The drama spilled out of boardrooms and into living rooms as Americans wondered what would happen next. The stakes? Nothing less than the direction of the U.S. economy. Every decision, every word now carried global consequences. Trump's move made a complex debate personal and urgent. The lines between politics and economics blurred, and the pressure on Powell intensified. Powell now faced not just economic data but a political firestorm. Every move he made would be scrutinized, every statement dissected for hidden meaning. The battle lines were drawn, and the world was watching as America's economic future hung in the balance. Why is Trump so fired up about interest rates? For him, it's not just a technical issue. It's a crisis that hits everyday Americans where it hurts most: their wallets and their dreams. High rates make borrowing expensive, whether you're buying a house, a car, or running a small business. Every loan, every credit card, every big purchase gets pricier, and that means people have to think twice before making life-changing decisions. Trump says these rates are crushing the American dream, making homeownership and business growth nearly impossible. Families are forced to put off buying their first home, and entrepreneurs can't afford to take risks or expand. He points to mortgage rates near 6.9%, adding hundreds to monthly payments and locking families out of the market. For many, that extra cost is the difference between moving in or missing out. Small businesses, the backbone of the economy, hesitate to expand or hire because loans cost too much. When borrowing dries up, so does innovation and local job creation. Trump argues this slows job creation and stifles growth. Fewer jobs means less money circulating in communities, and that ripple effect can be felt nationwide. But it's not just about families and businesses. The government itself is paying billions more in interest on its debt. That's taxpayer money going to interest payments instead of public services. Trump claims a 2-point rate cut could save the U.S. $600 billion a year. That's a staggering sum, enough to make a real difference in the federal budget. He frames it as common sense. Why pay more when you don't have to? Lower rates, he argues, would put more money back in people's pockets and help the economy grow. That money, he says, could rebuild roads or fund schools. Imagine what hundreds of billions could do for infrastructure, education, or healthcare. For Trump, the solution is simple: cut rates, unleash prosperity, and save a fortune. He believes it's the fastest way to jumpstart the economy and restore confidence. He's frustrated that the person with the power to fix it, Powell, won't act. Trump sees this as a missed opportunity to help millions of Americans. To Trump, it's a disaster with an easy fix. He's made it clear that in his view, the stakes couldn't be higher for families, businesses, and the country as a whole. And he's not shy about saying so, calling for action and making the case that lower rates could change everything. Now let's see Powell's side. As the head of the Federal Reserve, Jerome Powell faces enormous pressure from all sides, politicians, business leaders, and everyday Americans. But his focus remains steady. Inside the Federal Reserve, Powell's mission is clear: defeat inflation and protect the economy's long-term health, even if it means making tough choices in the short run. Inflation, rising prices, erodes the value of every dollar. It makes groceries, gas, and rent more expensive, hitting families and small businesses the hardest. Powell sees high interest rates as the main weapon to keep inflation in check. Raising rates makes borrowing more expensive, which slows down spending and investment. When rates are high, borrowing slows, demand cools, and prices stabilize. It's a delicate balance. Too much pressure can hurt growth, but too little lets inflation spiral. The Fed relies on data, not political pressure, to make decisions. Every move is based on careful analysis of economic trends, jobs, and prices. Even with inflation cooling to 2.4%, Powell fears cutting rates too soon could let it roar back, like in the 1970s when early optimism led to years of economic pain. He remembers history. Early rate cuts once reignited inflation, causing years of hardship for millions. Powell is determined not to repeat those mistakes. Powell insists on patience, waiting for clear, unmistakable signs that inflation is truly beaten before making any big moves. The Fed made a small cut in December 2024, signaling hope, but Powell is holding firm for now, resisting calls for faster action. He's defending the Fed's independence, even under fire from critics who want quicker relief or looser policy. For Powell, a little short-term pain is worth avoiding a bigger disaster. He knows that acting too soon could undo all the progress made so far. He's willing to take the heat to protect long-term stability, even if it means facing tough questions and criticism. The message is clear: don't pack up the fire hoses until the last ember is out. Ending the fight too early could risk everything. Powell's caution is about safeguarding everyone's future, making sure the next generation inherits a stable, thriving economy. When Trump called Powell a numbskull, Wall Street took notice. The financial world thrives on predictability. Trump's outburst injected uncertainty. Markets didn't panic, but investors grew nervous, recalculating their bets. The US dollar held steady, but gold, a classic safe haven, ticked up, signaling unease. Sectors like housing and tech, which depend on cheap borrowing, watched closely. Lower rates could mean a boom for them, higher rates keep them cautious. Investors started guessing, would Trump's pressure force the Fed's hand? Odds of a rate cut by September jumped to 76% after Trump's comments and new inflation data. But few expected an immediate move. Just 3% saw a cut at the next meeting. The market believes Powell will resist, but the pressure is real. Now, every Fed meeting is a must-watch event. Wall Street is on edge, waiting to see who blinks first. The drama is far from over. America's rate debate isn't happening in isolation. While the Fed holds steady, Europe is already cutting rates. The European Central Bank recently lowered its benchmark to 2%, betting inflation is under control. This creates a global split. Europe is easing, the US is holding back. Trump's team points to Europe. If they can cut, why can't we? They argue high US rates make American goods pricier abroad, hurting exports. A strong dollar fueled by higher rates can backfire for US businesses. But Powell insists the US economy is different. Stronger growth, more stubborn inflation. The Fed's job is to manage American risks, not follow Europe's lead. This global divide sharpens the debate. Is the Fed being cautious or just slow? The world is watching to see which approach wins. For now, the US stands alone, weighing its own risks. The question, should America follow Europe or chart its own course? The answer could reshape the global economy. With an election looming, is Trump's attack about policy or politics? He's raising real concerns about borrowing costs. But the timing is strategic. If the Fed cuts rates, Trump claims victory. If not, he blames Powell for any economic pain. Either way, he positions himself as the champion fighting for everyday Americans. By turning Powell into a villain, Trump simplifies a complex issue for voters. The economy and the Fed's decisions are now center stage in the 2025 election. Whether genuine or tactical, Trump's move makes the Fed a political battleground. This isn't just a fight among elites, it hits home for millions. The Fed's rate decisions ripple into every wallet. High rates mean credit card debt is harder to pay off. Average rates are nearly 29%. Mortgage rates near 7% put homeownership out of reach for many. Lower rates could ease these burdens, fueling jobs and growth. But Powell's caution aims to protect savings from inflation's bite. If inflation returns, your money loses value. Fast. The trade-off: immediate relief versus long-term stability. Every family feels the impact, whether they're borrowing, buying, or saving. The stakes couldn't be higher for everyday Americans. Here's the showdown. Trump demands action. Cut rates now, boost growth, save billions. Powell urges patience. Wait until inflation is truly gone. Both sides have risks. Cut too soon, and inflation could return. Wait too long, and families struggle. The debate touches every corner of the economy, from groceries to mortgages. It's a choice between bold moves and steady hands. No easy answers, just tough trade-offs. As the drama unfolds, the decision won't just be made in boardrooms, it will be debated at kitchen tables across America. The question is yours: cut now or hold the line?